Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Looking at the tech sector, XLK, Apple, Facebook, daily, weekly time frame. So the tech sector bulls showed up more than they have in the recent past, in the sense that we broke the lower high pattern clearly and we closed over exponential resistance on the daily time frame. The only thing is it occurred on very low volume, being a Friday. Fridays generally have lower volume as well. But what we need to see from here is multiple green days in a row. We haven't seen 2 strong green days in a row in quite some time, multiple weeks at this point. So we're going to be watching the high of Friday, 55.19. The bulls want to break that on Monday. And then we have the lower ball or the middle Bollinger Band dropping down. That'll be in the 55.30s on Monday as well. So keeping an eye out for the bulls to see some follow through, but we're going to set just another lower high at this point on the daily time frame. I got our all-time high, our lower high, and this bounce, in my opinion, will set another lower high, so I'm going to be scouting where that level is. What I anticipate to play out after that is a lower high, and then we're going to consolidate, and we're either going to form a higher low and then a higher high and really reverse this trend back towards the all-time high, or we're going to pull back and putter out and then set lower lows. So what entering bearish on a lower high will do will give you the opportunity to potentially have significant gains if we do head to the downside and hit lower lows, or it will allow you to limit any losses and potentially just keep it at a break-even stop loss if we do pull back, set that higher low, and then see a continuation for that higher high. So I will be looking bullish short term, at least starting the next week, for the tech sector, always watching the high of Friday. If any individual name breaks its high of Friday, it is instantly stronger than any name that has not. And then after that, I will be very cautious bullish, and I will be looking for a bearish entry. So the weekly time frame is a bullish reversal doji, bouncing just above the middle Bollinger Band right off of that. On the weekly time frame, the bulls really need to confirm this candlestick with a green week this coming week, or we are on the verge of this bearish TCG cross, which could follow through. So middle Bollinger Band and exponential moving averages are both key on this weekly time frame. Apple on the daily, we've got also a strong bullish day, most bullish day that we've seen in about a week. And we built a base of support here, 142.28, 142.20, so those are must-hold levels. And the bulls really want to get over these moving average resistances. We rejected from the 100-day 2 of the last 3 days. The middle Bollinger Band has not been support in almost a month at this point. And if we can get a green day on Monday, closing above both of those levels, which will be in the mid to upper 144s, that would show some nice follow-through. But same thing, looking for just another lower high compared to 148.28. I don't think any of these tech bulls are going to be able to break their recent high without a short-term pop and then some consolidation at the least. Weekly time frame lost the middle Bollinger Band. Exponential bearish TCG cross already occurred. We're rejecting from those exponential resistances, and if we break 142.20, we know another leg to the downside is coming on Apple. Facebook on the daily time frame is a lead tech bull because of the overall chart. Have to keep in mind we're coming off the all-time high most recently compared to other tech names. We have a higher low, higher high pattern on the daily time frame still intact, and we now have all moving averages back as support on the daily. So a lot of reasons why Facebook is the strongest. I've got 151.99 as resistance and then 153.47. So the bulls want to see a break of the high of Friday, some continuation, and we'll see if we can make our way back towards that all-time high, which we are not too far away from. That's all the way up at 156.50. We're currently $5 away, and that puts us at about, between 3 and 4%. Weekly time frame, look at the bulls buying the dip multiple times here, holding exponential support. We're still not closing below those levels in all of 2017, and most other tech names did lose their exponential moving average supports for many of them for the first time in 2017. So not the case for Facebook with the bulls buying the dip. We are on the verge of this bearish MACD cross, but we are still holding exponential moving averages. No bearish TCG cross looming on the horizon here yet. So looking for some follow through to the upside. And Facebook is one of the top names I am looking at for tech sector bulls along with Amazon. So I appreciate you watching. Hope you have a good weekend, good rest of your weekend, and we'll see you on Monday.